In the last decade, we've seen multiple bank failures, two bear markets, and the Great Recession. But who could have foreseen the great oil spill of 2010, the worst environmental disaster in the history of the United States? And how many people can say they know what its impact will be on your investments and your life? What we do know with certainty is that BP and top government officials grossly underestimated the magnitude of this disaster, and they've consistently given us false or misleading information. So, why should we trust them now, and what are they not telling us? Martin D. Weiss is the founder of Weiss Research, and here to help us find some answers to those questions.
Nobody has definitive answers, David, but we have been talking to experts who raise some very alarming questions. And what they're telling us is that there are three major gaps in the information that we're getting from official sources. The first information gap is about the oil well itself. While the underwater video cameras are focused on that single pipe gushing thousands of barrels of oil, we really know very little about the integrity of the rest of the oil well. And our experts suspect there are other leaks that were caused by the collapsed rig, and they fear that the entire well could blow open. If so, it would release enough oil to poison the Gulf of Mexico, not just for a few months or a few years, but for several lifetimes. Now, will that actually happen? Nobody knows. But it's that kind of uncertainty which is a large part of the problem.
But we're not just talking about this one well. The whole concept of deep water oil exploration's at issue here.
Exactly, and that's the second hole in this story. Until today, the assumption has been that we have all the advanced technology we need to dig deep in the ocean, that we can do it. And that assumption is the basis for future estimates of oil exploration in the Gulf. It's behind the expectations for recent huge oil discoveries by Petrobras off the coast of southern Brazil. It's even the basis for long-term forecasts for the supply and demand of energy globally, and it's a key factor behind the forecast for economic growth made by the Federal Reserve and the International Monetary Fund. But the Gulf disaster proves that there's one big thing they missed. And that one big thing is water pressure. At 1 mile below the surface, the pressure is the equivalent of 1 ton per square inch. So unless mankind wants to risk spills that make this one look small by comparison, the whole future of deep-sea exploration has now been cast into doubt.
That seems like a huge hurdle, but you say there's a third problem.
Yes, and it's the biggest one of all. It's the concept of peak oil. Mankind has already tapped all the carbon-based energy sources within easy reach. Now we're pushing the envelope into sources that are more difficult to reach, which makes them more costly, less productive, and as we've just seen, far more dangerous.
I'm familiar with the concept of peak oil, and I see some experts talking about it from time to time. Did those experts predict this disaster?
No. They didn't predict this particular spill in the Gulf of Mexico at this particular time, but some of them did say, quite bluntly, that monumental disasters like this one were inevitable. And Sean Broderick, Weiss Research's energy expert, is one of them.
Thank you, Martin. We'll be talking to Sean Broderick in just a minute. He has some real solutions to this dilemma for mankind as a whole and for you as an investor. Stay with us. From our studios in Jupiter, Florida, Weiss Money Network presents Money and Markets. And now, Jamie Holmes.
We have all seen the video of the undersea well in the Gulf of Mexico spewing oil. We've all seen the pictures of the toll it's already taken on the beaches and the wildlife along the Gulf Coast. But the impact of that disaster has only just begun to be felt. We still don't know exactly how much oil is leaking into the Gulf. But a member of the government panel looking into that question says it may be 100,000 barrels a day, a number BP once called its worst-case scenario. That rate would be equivalent to an Exxon Valdez every 2.5 days. The modern world has never seen a disaster like this one, so it's impossible to predict just what the environmental or economic fallout will eventually be. Sean Broderick has been watching the energy sector for many years. He says there are some major changes on the way. Sean, what will be the effect of this catastrophe on the economy as a whole?
Well, Jamie, aside from the obvious impact on tourism and fishing, I think we're going to see another major downturn in the real estate market. I mean, who wants to move to the Gulf Coast when the Gulf Coast is covered in oil? Who wants a beachfront view of an oil slick? Nobody. So all those beautiful condos lining the beaches could see their prices drop by 30 to 40%. This will also have a devastating impact on the construction industry, which is already in terrible shape. And I think about all the restaurants and the other businesses with beachfront property all over there. Those businesses could go out of business. Now, the University of Central Florida says that the oil spill could cost Florida alone $11 billion and 195,000 jobs. And many of those jobs may never come back.
Of course, a lot of that depends on how fast BP and the government can actually stop the spill, right?
Well, they haven't stopped it yet, but yes, exactly. President Obama says that up to 90% of the oil leaking out of the well will be captured in the coming weeks. BP swears on a stack of Bibles that they can fix it by August, but a lot of experts that I'm talking to say that this may not be fixed until December. So we could be looking at a very long-term problem here. And it's not just Louisiana, Florida, Alabama, Mississippi. Texas could be in trouble too, especially if hurricanes get into the Gulf and blow the oil west.
Okay, that scenario, you're talking about a global problem now, right?
Well, yeah, the oil is already in what's called the loop current, which is a current that goes around the Gulf of Mexico. From there, it's only a matter of time before it gets into the Gulf Stream. And when it does, it basically can go anywhere. I mean, I believe that soon enough you'll see oil washing up on the beaches of New York and Massachusetts and also Europe, and it could affect their fishing industries as well.
And you haven't even mentioned the chemical dispersants that BP is using.
Yeah, well, that's a nightmare. It's a science experiment on a global scale. There's no way to know for sure what the environmental impact will be when all this is said and done. But one thing that is certain is that we'll probably be dealing with this for decades.
Okay, let's put aside the long-term impact for a moment. What kind of short-term impact do you see the spill having on energy markets?
Well, frankly, not much. There's a huge amount of oil spilling into the Gulf, but relative to the amount that's produced worldwide, it's a drop in the bucket, and the market has already priced it in. What's going to have more impact on the energy prices over the next few months is that the hurricane season, that is projected to be very active. And also, it's been the hottest year so far on record. That means more energy is in the ocean to feed any hurricanes. As storms form, even if they don't come toward us, it could panic the market. If we see especially strong hurricanes early in the summer, traders will take that as a sign that this hurricane season will be as bad as some of the experts have been predicting. So, short term, I see prices going up, but not because of the oil spill.
And long term?
Well, it won't be a straight line. That's one thing many people don't understand. But oil prices are inherently volatile. They're affected by hurricanes, of course, but also by the economy, geopolitics, piracy, any number of factors. But prices will continue to trend higher, and the reason for that is peak oil. Peak oil doesn't mean that we're running out of oil. It means that we're running out of the inexpensive and easy to pump oil. We've already tapped the big, easy to find conventional oil fields that are on land and close to shore. And oil that's left to find is increasingly remote. It's much harder to get to and much more expensive to extract, not to mention dangerous. And when there is an accident, like the one that happened in the Gulf of Mexico in April, it's much harder to stop. We found that out the hard way. In 1969, a drilling platform 6 miles off the shores of Santa Barbara blew up, spilling 100,000 barrels of oil into the Pacific Ocean and onto the beaches of California. The spill lasted for 10 days, killing thousands of birds and fish, and fouled the coastline for years. By some estimates, the BP spill in the Gulf of Mexico is equivalent to the Santa Barbara disaster every single day for more than 2 months, and it's still going on. Our drilling technology has really improved over the last 40 years, so why can't they stop the leak? Well, back in 1969, that leak occurred in 189 feet of water. The one today, BP's blowout, is under more than a mile of water. As Martin Weiss told you earlier, that makes a world of difference. Because it's so much harder to get out these oil resources all around the globe, I believe we've hit global peak oil production. In fact, 54 of the top 65 oil producers hit their peak production already. The U.S. hit its peak oil production back in 1970. According to the Energy Information Administration, Global production of all liquid fuels is about 87 million barrels a day, but crude oil production peaked back in 2008 at under 75 million barrels a day. That's probably the highest it's ever going to get, and it's all downhill from here. But we rely on cheap oil for our way of life, our big gas-guzzling cars, our